Unit second, as per your syllabus, unit second, and the title is foreign exchange. Let us start unit 2. Actually, we have started from last session. Now this is our second session on unit 2. This is our second session on unit number 2. Forex market. Now, it is the market where currencies are bought and sold. Can you view my PPT? Can you see my PPT? Yes, please.
Yes, sir.
Okay. So foreign what is forex market? It is the market where currencies are bought and sold against each other. That is known as foreign exchange market. So either currencies are bought or currencies are sold against each other. And let me tell you, forex market, it is OTC market. OTC means that is over the counter market. It is an over the counter market. In short, it is the word is used OTC. O stand for over, T for the, and counter, over the counter, OTC market. So please do remember, forex market, it is OTC counter, OTC market. Why it is OTC market? Because there is no any physical location for foreign exchange. There is no physical location. Now you might be wondering, then how these transactions are taking place if there is no physical location? So the entire transactions are taken place through electronic devices, mostly telex, telephone, telex lines are used, and through email, telex. And so that is why there is no physical location for foreign exchange market. All transactions are done through electronic marketplace or an organized exchange like stock exchange. And the next feature of forex market is it is worldwide market through networking of internet trader. So it is not restricted to only a few countries. It is across the globe, across the globe. So it is worldwide market through networking of internet interbank traders. Now, why do we need foreign exchange? So there are many reasons, but few reasons I have mentioned over here. The principal function, that is transfer funds from one nation currency to another. So many times our Indian rupee we transfer to USA, or Japan currency, that is yen, is being transferred to India. So either we transfer our currency or we receive other country currency. Second one is transfer of purchasing power. Now parties living in countries with different national currencies. So they are also doing transaction outside world. Living in countries with different national currencies means, say one person staying in say Canada, the other person stays in say USA, and third person stays in say India, and among these three nations transaction take place. Now a person who is sitting in Canada, if he is having purchasing power, so he can deal with Japan. Now Japan having say their purchasing power, they can have a transaction with India. Again, India also, if if they are having good amount of purchasing power, they can also transact with Japan. They may import or they may export also. Either there may be import or export. Third need, it is money gives purchasing power to the one purchasing it to purchase goods and services by the resident of another country naturally. Now suppose, take example now yourself, if you are having a good purchasing power, so you can purchase goods or you can have services by the resident of another country. Means you can import their goods or you can import their services also. So that is importing. Now the next one is for import of food items, petroleum products, technology, life-saving drugs from foreign countries. So for that purpose also we need foreign exchange. So many times we order food items from outside. Then petroleum products, as you are aware, so the entire petroleum products are being India imports from Gulf countries, and in turn that we pay in terms of dollar. So petroleum products. So for that purpose also we need foreign exchange. Technology. As you know, developed countries like say Germany, Japan, they are known for technology. Now, if you are importing technology from Germany, so for that purpose also there is a need of foreign exchange. Now, you might have heard now in Pune, metro work is going on. Metro. So this metro setup, establishment of metro. Now we have taken the help from developed countries, particularly in German, from German. So the German machines have been imported to India. Even from German, engineers are also rendering their services to India for the development of metro. So technology part, which is associated with the metro, that we are importing. So for that purpose also we need foreign exchange. Then life-saving drugs from foreign countries. So there are many diseases like say cancer and some other diseases where we need these drugs from other countries. So if you are importing such drug from other country, we need foreign exchange. So this is also one of the need. Then the last one is for availing of services such as education, tourism, healthcare, insurance, banking, hospitality, telecom and entertainment, etc. So for that purpose also we need a foreign exchange. Now if you would like to pursue your MS education, maybe in foreign countries, MS after graduation, so for that purpose also foreign exchange is required. Tourism, naturally. Now if you wish to visit Malaysia or Thailand or maybe Switzerland for spending your vacation, so for that purpose we need foreign exchange to spend over there. So generally if you are going for tourism, so traveler's checks are available. Traveler's checks, it is known as traveler's check. So through traveler check we can spend maybe in Thailand or Malaysia or maybe in Switzerland. So traveler check generally is being used in tourism. But for education, where you will have to purchase their currency, means in Indian rupee, you have to pay in Indian rupee and buy the currency, and then you can pay fees over there. So for that purpose also we need foreign exchange. Then healthcare, insurance, these are some sectors. Pharmaceutical companies, insurance companies, life insurance, general insurance. Even our Indian general insurance companies have also opened their business in foreign countries. So if our insurance company have opened, if our insurance company rendering services to other country, so it is called as the export of services. So insurance company is exporting. Vice versa. If our Indian establishment, if they are taking insurance services of foreign countries, so that is the case of importing insurance service. Similarly, for banking, hospitality, telecom, entertainment, and there are many fields where there is a continuous exchange of these services. And for that purpose, there is a need of foreign exchange. So in examination, if you are asked, discuss the scope or discuss the need of foreign exchange. So please do remember this point, and you can also have a screenshot of this PPT. May I go to next slide now? Yes, please. May I go to next slide?
Yes, sir.
Fine. Now, this slide speaks about the features or uniqueness of forex market. Unique, that is something different, which is not in our either a primary market or secondary market or even in capital market. So it is something different. Now, you might be aware, secondary market. What do you mean by secondary market, by the way? What is secondary market? Anyone? What do you mean by secondary market? Can you answer me? What is secondary market? Am I audible? Hello? Am I audible, please? Can you hear me? Secondary market, it is the market where the buying and purchasing of shares, where transactions of buying or purchasing of shares take place. That is known as secondary market. Primary market, where first time issue is open. That is primary market. Now, this forex market, it is totally different from this primary market as well as secondary market. So what is the, why it is called as a different? So there are some uniqueness. Trading volume. Now, there was one bank which is called as BIS, business. This BIS bank conducted one survey, and that survey has mentioned that since 2005, this trading volume of forex market is being increased substantially, has been increased significantly. So trading volume, it is at a larger rate. Then second uniqueness is extreme liquidity of the market. So this market is having a huge amount of liquidity. Extreme liquidity means whatever currency, suppose if you are holding say US dollar, so almost 99, I can say even 100%, you will get that amount, 100%. So that is why it is having extreme liquidity. 100% there is a surety that you will get amount against a dollar. So that is why this is one of the uniqueness. This liquidity you won't get maybe in a secondary market or primary market. whatever amount you have invested in under shares. So if you have decided to sell shares maybe after 3 or 4 months, the amount which you have invested, there is no guarantee that you will get that amount back. Sometimes you may get double amount also. That is also there. But sometimes you may lose your money also. If share prices goes down, then there are chances to lose money. So that is why even in secondary market, we cannot guarantee for liquidity. But in forex market, there is a extreme liquidity associated with this currency. Third uniqueness is large number of and variety of traders in the market. So there are wholesaler, retailers. In last session, we have discussed the four participants which are involved in market. So that these four persons having large number and the variety of traders also. Another important uniqueness of is geographical dispersion. Now, what is this geographical dispersion? Geographical dispersion is you won't find any geographic location for this forex market. As I mentioned in earlier slide, that these entire transactions are taken place through telex, fax, messages, internet, and email. So through electronic devices, these transactions are took place. Another uniqueness of forex market is long trading hours, 24 hours a day, except weekdays, weekends, except weekends. So generally Saturday and Sunday, this market is closed. But Monday to Friday, the market is open for 24 hours. And there is a reason why this market is open for 24 hours. Because now suppose, now today we are sitting in India, but suppose if I am having transaction, say in Canada, so Canada right now the timing might be different. Yeah, in Canada there is no evening time. They might be having say morning time. So now at say 7 past 23 minutes. Now we are almost closing our operations. But in Canada, they have just started their operations. So this is the time zone. And because of this time zone, continuous these transactions happens in forex market. So if you are interested to deal in forex market, so be prepared. I'm not saying that you have to work for 24 hours, but if you are dealing with this, then you have to nominate people who can work in a shift basis. So some people will work in a morning shift, then afternoon, and then night shift. So likewise, we can have transactions in forex market. Next slide. Now, how foreign transaction take place? Now here I am presenting this pictorial information. Now here domestic bank. Now domestic bank, say for example our own Indian bank, let's say State Bank of India, and here it is foreign bank, let's say Citibank. So now between these two banks, they will exchange their account number, SWIFT code, and PIN number. PIN number, account number, and SWIFT code. And this happens between domestic bank and foreign bank. I have taken the name of State Bank of India and Citibank. Now these are the functions of forex market. The first function of forex market is to facilitate conversion of currencies. So conversion of currencies, to convert from Indian rupee to dollar or pound, or to convert pound into Indian rupee. So conversion of currency, this is the main function of forex market. Second function, provide credit for international transactions. As I mentioned that, suppose if anyone would like to pursue education in a foreign university, so you have to make their fees payment in their in their currency. So for that purpose, you need a foreign currency. So for that purpose, forex market may give you credit to complete this transaction, education loan. Then third one is minimize exposure to the risk of exchange rate fluctuation. As if you observe, and you should observe, every day you will see there are changes in say dollar rate. And if you compare, now suppose if today is 14th February, dollar rate of 14th February and last month say 14th January dollar rate, you will see there is a difference in this 1 month rate of dollar. Now, in this fluctuation situation or volatility, a lot of volatility is there. Now, how one should ensure that this rate should be stable. Now, rates are never stable. Let me tell you, foreign exchange rates are never stable. But in order to minimize this risk, we can use some tools and techniques. So, such tools and techniques we can this forex market can assist. So there are some traders who provide this kind of services, and for that purpose also they charge commission. So naturally, one will have to pay commission. Now it is the market where individual firms and banks buy and sell foreign currencies. Now in this forex market, individual like you and me, firms like company, multinational companies or Indian company, and banks, generally Reserve Bank of India and even private bank HDFC, ICICI, these banks are also involved into this forex market. So individual firms and banks buy and sell foreign currencies, facilitate transfer of funds from one currency to another. So they help us to transfer currency from one country to another country. Next function is transfer purchasing power necessary for international trade and capital transactions. 24/7 market, except Saturday and Sunday. So we cannot say 7 days. Weekends, this market is closed, and there is no fixed marketplace. So I have been repeatedly telling you that there is no fixed marketplace. So geographical location is missing in foreign exchange market. So the location is your laptop, your online, your net, and mobile telephone. So these are the location, telex. So through this, the transactions are completed. Worldwide network of participants, retailers, bank, governments, well-connected telephone lines and computers are connected with these participants, and through this, the transactions are being completed. Now, after understanding functions of foreign exchange market, now we'll talk about the intermediaries. Now, who are involved into this foreign exchange market? Intermediaries. We may call them intermediaries, the parties who are involved into this foreign exchange market. So it is following two-tier system. Two-tier system. Interbank or wholesale market, and the second one is client or retail market. So please do remember this. In forex, it has two-tier market system: wholesale market and retail market. Now wholesale market is also known as interbank market. So please remember this word also. Maybe in your MCQ exam, multiple choice question exam, this kind of question can be asked. So interbank is also known as wholesale market. Client or retail market. Now, who comes under retail market? Now, a person who is going for just to visit a foreign country as a tourist. So he falls under this retail market. International banks, bank customer. So bank itself is a customer, like say State Bank of India, ICICI, HDFC. They are the bank customer. Reserve Bank of India, we cannot say it is customer because they are that is our central bank. And non-bank dealers, like say brokers. So these are non-bank dealers. So there are several brokers, even in metro cities like Mumbai, Kolkata, Delhi. You will find the brokers offices and who provide services in forex market. So they are also one of the intermediary brokers. Central bank. Now, in case of India, Reserve Bank of India is the central bank. In case of America, Federal Bank. So they call Federal Bank as a central bank. It is their central bank. Then arbitrators. Arbitrators who are involved into the continuous buying and selling of currency. They are known as arbitrators. Then speculators. Now they are involved into the speculation. So a lot of fluctuations, and in order to minimize this risk, so there are speculators who provide this kind of services. But while providing the services, they also charge commission. Then another is hedger. Now, what is the role of hedger? Risk coverage or future fluctuation. So they have their own study, they have a skill, they have a study of economic, technical, as well as accounts. So with this knowledge and expertise, they does product prediction, maybe say after 2-3 months, what will be the likely situation with the pound or pound. But again, it is prediction. We cannot say it is 101% that way it will happen. It is just prediction that helps you to take a decision. So hedgers are also one of the intermediator in forex market, and of course the government. Now government, we have separate department in at a central level, which is known as foreign affairs. So foreign affair, this department, which is closely connected with government. It is connected with, it is a part of government only from the union. Any doubt for these intermediaries? Any doubt?
No, sir.
Okay, fine. So after understanding this 8 to 9 market intermediaries of foreign exchange, let's go ahead. Foreign exchange rate. Now, the number of units of given currency that can be purchased for 1 unit of another currency. The number of units of given currency that can be purchased for 1 unit of another currency. Now, let me give you the example. Suppose, now, being an Indian, we would like to purchase, say, $1 of USA currency. Now, here, as per today's rate, suppose today's rate is say 74 rupees and some paise. So, in order to buy, say, $1, we have to pay 74 rupees. So that is, we can say it is the rate of one currency to another currency. It is the rate of rupaya and dollar. Are you following me?
Yes, sir.
Then second one is there are two rates. Now, what are these two rates? Fixed and flexible. So fixed means it is fixed and flexible, or floating and fluctuating. Now, fixed rates, earlier this concept was there, but now no one is offering fixed rate because the international market is such a volatile market. Every minute, sometime every say second, the rates are gets changed. So this is having fluctuating. This is known as fluctuating market. Now in say 1973, result market became volatile and erratic. Till 1973, the market was stable. But after 1973, but particularly after 1991, this market has become much volatile. There are a lot of fluctuation. So in regards to the rate, every time it is linked with the BOP, that is balance of payment. So a countries whose balance of payment position is good, so their currency appreciates. A country whose balance of payment position, if it is average or below average, so their currency depreciate, means their currency goes down. Depreciation means going down. And a country whose BOP is above the line, or whose BOP is a good one, best one, their currency gets appreciated, means their currency increases. Now forecasting exchange rate, let here I mentioned, it is a real challenging task. If you are thinking to have a career in this forecasting exchange rate, you need to be have a knowledge of international economics, then microeconomics, political, geographical, and their industrial also. So such a vast study is required if you would like to work particularly in forecasting exchange rate. So there are many brokers and people who are into this particular career, who are into this particular job, but it is a really challenging task. But this task, now see, where there is a challenge, there a person the person is awarded, means yeah, he gets a huge amount out of this task. Where the work which is less challenging, then the person is less paid, because that is not much challenging. So naturally, the person is less paid. So if you want to become a highly paid person, then one can accept this challenge and may have a career in forecasting exchange rate. Am I audible?
Yes, sir.
Can you see PPT?
No, sir.
PPT not visible. One second. Yes, can you see now PPT?
No, sir.
No. One second. Miss, you can hear me, but you can't see PPT, is it?
Yes, sir.
Yes, sir.
Yes. Now, what is the position? Can you see PPT now?
Yes, sir.
Okay.
Yes, sir.
Okay. So, if you are asked that what are the techniques of forecasting in regards to the foreign exchange, so please do mention the techniques are efficient market approach, fundamental approach, and technical approach. Now, what it is, we will discuss this one by one. Efficient market approach, it is the approach which considers current asset prices fully reflect all available and relevant information. Now, these current assets prices, this will be available in BOP, balance of payment, and fully reflect all available and relevant information. That is money supplies, inflation rate. Now, every country, their inflation rates are different. We cannot apply one rate to all countries because it differs country to country. So inflation rate, one will have to study under this efficient market approach. So here we need to study thoroughly economics. So inflation, it is a part of economy. And even these inflation rates are also controlled by central bank, like say in our India, Reserve Bank of India is our central bank. So Reserve Bank of India, every after 6 months, they declare their policy. The policy name I'm not remembering right now. But every after 6 months, the Reserve Bank of India declares the rate of repo rate and reverse repo rate. Repo rate and reverse repo rate. And through this repo rate and reverse repo rate, Reserve Bank of India also exercise the inflation rate. Now recently, 3 days back only, our Governor of Reserve Bank of India, Shashikant Das, he presented the policy. It is known as monetary policy. Now I remember the word, monetary policy. Now this 3 days back, the monetary policy which was declared by Shashikant Das, Governor of Reserve Bank of India, and he mentioned that all rates are as it is. So there is no change in repo rate as well as there is no change in reverse repo rate. And they have also expected that our GDP of India will touch to 9.5%. Now these inflation rates, as I told, central bank, they also ensures the inflation rate. Now in regards to India, Reserve Bank of India. If you are talking about America, then Federal Bank, who plays an important role in inflation rate. Again, not only bank, but if a country who is having good amount of employability, so in that country, generally, they do not face such situation, inflation. But a country who is having less opportunity for employment, but the needs are there, but those people not having sufficient money to satisfy their need. So there is a mismatch. So population is there, needs are there, but in order to satisfy need, we require money naturally. So they do not. The prices of product gets increases. The prices of product get increases. Am I audible?
Yes, sir.
So
Yes.
the prices of product gets increases. Now, in order to avoid this situation, now here again the central bank plays a vital role. So they make available money to the country. And how do they make available money to the country? The money, the maximum money is being pumped or supplied through Reserve Bank of India. So through the change of repo rate and reverse repo rate, or maybe sometimes CRR, that is, anybody knows what is CRR? What is CRR and SLR? Any idea? Have you heard this word? CRR and SLR? Am I audible? CRR and SLR.
Yes, sir.
What is CRR? What is short form, long form of CRR? Cash reserve ratio. Cash reserve ratio. And SLR, which is stand for statutory liquidity ratio. This CRR and SLR are controlled by Reserve Bank of India, RBI, who controls. And through this CRR and SLR, the inflation rates are being controlled. So these are, all comes under efficient market approach. If you, as I told, if you would like to forecast foreign exchange rate, तुम्हाला जर का फॉरेन एक्सचेंज रेटचं जर का फोरकास्टिंग करायचं असेल की भविष्यामध्ये त्याच्या किमती काय होऊ शकतात, so this is one of the technique, efficient market approach. So in the under efficient market approach, you need to have a thorough knowledge of inflation rate and how inflation rates are being controlled. What are the tools and technique in order to control inflation rates? So that study one will have to do. Then trade balances. This trade balances, this comes from BOT, balance of trade, and output growth. Another approach in order to forecast foreign exchange, that is fundamental approach. Now in fundamental approach, again, one has to have a thorough study of macroeconomics, macroeconomic. So this data is available on online. Macroeconomic data is available. Again, there are some publications. Even Reserve Bank of India, they publish quarterly bulletin. Through this bulletin, this fundamental information, this macroeconomic information is being published. Now, fundamental approach basically which covers economics part, that is fundamental approach. Efficient market approach which covers practical part. Please try to understand. Efficient market approach covers practical part. Then fundamental approach covers macroeconomic part. Now the third approach for forecasting foreign exchange, it is technical approach. This technical approach, now what comes under technical approach? Technical analysis. So there are some tools and techniques available. So some courses are also available at a national level as well as international level. After studying those courses, a person gets idea of this technical approach, that how. So there is a study of currency charts and patterns. A lot of analysis tables are there. So such tables with the help of table, and again softwares are also available on computer softwares. So through that software, if you provide input, required input, then you get the analysis of that particular currency. Say, I wish to give you the example of, say, Let us take example of accounting software, that is Tally. Now in accounting software, now it is a software which is designed by computer expert. Now this in order to get Tally result, what information you need to feed into this Tally software? What are the information is required? Any idea? If you want to get final result of Tally, what are the inputs required? Yes. What are the inputs required?
Purchase, sales, etc.
Yes, all entries in regards to the sales and purchases and expenses and income. So these entries are required. And once you feed these entries into the Tally software, then Tally will give you ledger. It will also give you the statements like say profit and loss account, balance sheet. Even it will give you the statement for inventory control also. So similarly, for technical approach, if you would like to get this analysis, so required input one will have to feed, and then we get the charts and pattern, and through this chart pattern we can have a prediction, we can forecast about a particular currency. But again, it is a forecast. We cannot claim that 100% it will happen that way only, but there is a surety that at least 90% result you get through this technical approach, 90%. So even if you are getting 90% correct result, 10% it is here and there, but 90% results are correct through this technical approach. Then next one, now we will discuss about factors affecting foreign exchange rate. Now foreign exchange rate, now which are the factors which affects on foreign exchange rate? Now again, from the examination point of view, if you are asked discuss the factors which influences foreign exchange rate, discuss the factors which influences foreign exchange rate. FER stand for, what do you mean by FER? Yes, please.
Foreign exchange rate.
Foreign exchange rate. So what are the factors which influences foreign exchange rate? So economic factor such as government budget. Now recently on 1st of February, our union government, our union finance minister Nirmala Sitharaman, she presented budget in the Parliament House. So through this budget, now if there is a huge amount of deficit, immediately it affects on FER. Even if there is a surplus budget, still it has the effect on foreign exchange rate. So either deficit or surplus. So if deficit, there will be negative impact, and if there is a surplus, then there will be positive impact on FER. But there will be impact either positive or negative. Now everyone will have different view in regards to this foreign exchange. Now if you are exporting, if you are importing, if you are involved in the importing business, so accordingly you will take. So government budgets is also one of the factor which affects on FER. Then balance of trade level. So balance of trade level, that is BOT, which indicates the economic transactions between the countries. So these levels and their trends do matter on FER. Next one is inflation level and trends. Inflation level and trends. Now even if you are studying Indian economy, apart from this pandemic situation from last 1.5 years, almost now it is 2 years time. But fortunately, we are not much prone to the inflation. Inflation is there, but it is not that way. It has not been increased that way, which was predicted last year. So somehow, fortunately, we are not facing that particular level. So because of this trend and this level, if country is managing inflation level and trend, then FER will not change that way. But if country's inflation level and trend changes, then it has a negative impact on FER. Then economic growth and health also. We all are witness for this health problem. From last almost 2 years, we have been not we, but entire world is facing health issue in regards to this pandemic, corona. So this has created a very negative impact almost on each and every country's economy. So this is also one of the factor which affects on the FER, that is economic growth and health. Then political condition. Now political condition, this is associated with each and every country, because now I think 4 or 5 months back there was a US president. Now it's Biden. Before Biden, who was the US president? Donald Trump. Is it? Am I correct? Now
Yes, sir.
US's president is Biden, Joe Biden. Before Joe Biden, Donald Trump was there. Now, whenever there is a change in highest position of a political leader, so that also matters on the foreign exchange rate. Even if party gets changed, so that also has an impact on FER. Now, country like India, there is a huge diversity in India, right from Manipur to Maharashtra. It's a huge amount of difference in culture, language, and still this Manipur to Maharashtra represents India as a country. Now, as a country, again, we have several parties in India. I don't think that I should explain what are the parties we have in India. Everyone is aware. So India, because of this diversity, we have number of parties. But if you compare other country like say USA, any idea in the USA how many parties are political parties in the USA? Any idea? How many parties in USA? Okay, in India, how many parties we have in politics in India? Hello, am I audible? In India, how many parties are there? Political party? Single party or 2 parties? Yes, please.
So 8 national parties and 54 other parties.
Other
like-
parties. So this is the number. This is the number. Now in regards to the USA, any idea how many parties USA has? In USA, there are only 2 parties, Democratic and Republican. Only 2 parties. But India, as you mentioned, that we have a number of parties. Now these political conditions differs from country to country, and that affects on the FER, foreign exchange rate. So this was about today's session. In next session, again, we will continue the unit number 2. Rest of the points we will discuss in the next session. Thank you all for attending session. Now we will close our session. Thank you.
Thank you, sir.
Thank you.
Thank you, sir.
Welcome.
Thank you, sir.
Welcome. Thank you.